This is the FCTO Daily Forex News Report for the 12th of April 2013. According to comments made yesterday by Bank of Japan Governor Kuroda, in an attempt to convince markets without risking his credibility, the inflation target is flexible and the strategy to double Japan's money supply is not designed to manipulate the value of the yen, nor will it give rise to asset bubbles. The drastic step up in money printing operations in Japan, coupled with continued quantitative easing in the US, has spurred renewed capital inflow to China. Yesterday, China reported a $128 billion rise in its foreign exchange reserves to $3.4 trillion, following 3 quarters where it was virtually unchanged. The surge suggests that China has resumed its foreign exchange interventions in order to ease some of the appreciation pressure on their own currency. The International Energy Agency has lowered its 2013 estimate of European oil demand by 40,000 barrels a day, following a downward revision of 10,000 barrels a day in March. According to the IEA, the renewed debt woes caused by the Cyprus bailout are weighing on oil demand. Risk sentiment remained buoyant throughout the US session, where the Dow Jones Index and the S&P 500 Index both rose 0.4%. However, Asian shares are shedding some gains this morning, particularly with the Nikkei taking a breather after its strong run recently. US Treasuries traded mostly sideways yesterday after taking losses during the week, as discussions on tapering the Fed's quantitative easing program have continued despite the weak labour market report last week. During the European session, Irish government bond markets received tailwind from speculation that the nation may receive an extension to the loans received under its bailout package. Portugal may also see an extension, although the constitutional decision on the country's austerity measures could be a hurdle. Hopes have risen that a deal to extend maturities may be reached at today's Eurogroup meeting. The US dollar has lost some ground overnight, causing US dollar Japanese yen to hover around 99.50, while Euro US dollar has broken well above 1.31. US dollar Japanese yen is struggling to break above the 100 level, but given the significant shift in Japanese monetary policy, this should just be a matter of time. US initial jobless claims came out strong, but this did not lead to overall dollar strength, and Euro-US dollar is still correcting higher as presumably trading accounts are reducing short positions following the recent performance of the European peripheral bond market. In data news today, US retail sales will show whether consumers have continued their spending spree in March despite higher tax rates and the rise in gasoline prices earlier in the year. Based on chain store sales and car sales, we expect the core retail sales to show a decent rise of 0.5%. The headline retail sales will grow a little less as car sales and gasoline prices declined in March. In the Euro session, we get industrial production for February, and based on the data from individual countries, we look for a small rise in production of 0.1% month on month. There are some signs that production has stabilized in early 2013, in line with the slight improvement in PMIs in January and February, although March was a weak month. For all the Forex news affecting the markets today, please join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.